Mortgage holders will be keeping a close eye on movements in interest rates as the Reserve Bank takes steps to moderate New Zealand's economic upturn. The bank yesterday raised the official cash rate to 2.75%. Mortgage Link Otago Director Glenda French is with us to explain just what that all means for homeowners. Good evening, Glenda.
Hello.
What are the immediate effects for homeowners?
Well, we've already seen some of the banks increase their rates by 1.24 and the full 0.25 increase that's been passed on. We may see some of the shorter fixed terms, the 6 month and maybe the 1 year increase, and we can also, we've already had some of the banks withdraw their short-term special rates. So it's a wait and see. We do expect the banks to flow that on. At the end of the day, it's to keep it into perspective. That 0.25 rate, if you were on a floating rate, is on a $200,000 mortgage is $8 a fortnight. So we do need to keep this into perspective.
What do you expect to see in the longer term?
In the longer term, we can expect the rates to rise. You know, we've been historically low for some time now, so it's going to happen. But it's a matter of keeping the structure right for what you've got. You know, you can fix your loan, you can have some floating. It just depends on what's right for you. And some of those longer term fixed rates have actually been significantly higher than the shorter terms. So once again, it just depends on each person's individual circumstances. What
will the increase have on the mortgage market, do you think?
It's going to be a wait and see. The rates for the OCR, that affects the floating rate. The longer term fixed rate, it doesn't actually affect, usually. The banks obviously can pass whatever they like on. So it'll be a matter of just seeing what happens, each person's circumstances.
Are we likely to see that lending cap that's in play at the moment, are we likely to see that disappear in the future, do you think?
I don't think it will. I think it will remain. It may be just adjusted in the amount that can be done above that 80% level. But I don't think, personally, that they'll actually take that cap, that ability to adjust things.
Do you expect to see more people coming off their floating rates then in the next little while?
I think we've seen that happen already. The floating rate, you know, it's been so low for so long, and historically we haven't seen this for many, many years. So we'll just wait and see, and I've just gone blank.
What sort of advice might you give some homeowners at the moment if they were perhaps on the floating rate?
Oh, look, the floating rate, the opportunity to fix at those really low rates is gone. Just before Christmas, the banks increased their fixed term rates. It was a shock for everyone. I think everyone had become a little bit complacent, and we knew it was going to happen, but it did take us by surprise, actually, when that did happen. It's a matter of looking at what you've got and just having it structured correctly. The rush to fix in something, I think basically you've just got to not panic. The rates will go up, but they will be, I believe, quite slow and steady. We're predicting, some are predicting a 2% rise over the next 2 years. Even if that does happen, that still means we're going to have floating rates in the 7%. Historically, fantastic rates. So don't panic.
Mortgage advisor Glenda French, thank you so much for your time.